Welcome to the latest installment of ABL Advisors video series featuring thought leaders from the commercial finance industry. Today, I'd like to welcome our guests, Greg Eck, Senior Vice President, ABL Group from Fifth Third Bank, and Bill Staple, Senior Vice President of the ABL Group, Fifth Third Business Capital. Thanks for being here today, gentlemen.
Thank you.
Thank you, Mike.
Nice to have you here. I'd like to start in on the topic of today's discussion, and that is to cover a little bit about your insights into what you see ahead for the ABL sector for small, mid-sized, and large businesses in the United States. But before we get into that, I'd like to give you an opportunity to tell us a little bit about the announcement that was made in early January that both of you are named new co-leaders of Fifth Third's asset-based lending group. Can you tell us a little bit about your individual roles and why this role has been split into two folks?
Thanks, Mike. They named us co-leaders as our respective teams are covering different segments of the marketplace. Fifth Third Business Capital is a national business focusing on the lower middle market ABL deals with credit facilities 5 million and up. We've been together for a really long time. In fact, some of us for decades. We have a strong referral network, and we are known in the industry for being consistent in how we approach lending and closing what we propose. We are full balance sheet lenders. That being, not only do we provide revolving credit facilities, but we lend on the term assets because these are normally smaller facilities where you have to have the whole thing. And our deals are really transactional focused. Whether it be a buyout or a turnaround situation. Whereas Greg, when he built the team, he started, looking at the larger corporates. And Greg?
Yeah, so my team really deals with the middle market to the large corp space. Our deal target is 15 million and above. Our footprint is national from a large corp perspective and a regional coverage from the middle market perspective. So if you look at Fifth Third's footprint, we're predominantly east of the Mississippi. We have markets in both California and Texas as well. So we cover all of those territories from the middle market side.
Okay, great. Thanks for making the distinction for us. I appreciate that. So with that being the case, I'll start right in with some of the questions related to the market. As you mentioned, you're a leading asset-based lender and you're serving small, mid-sized, and large businesses all over the United States. And I'm curious to know, how would you describe the demand for asset-based lending products in 2020 as we were in the midst of the pandemic? We're still in it right now, obviously, but how would you describe the activity in the asset-based lending market for both of you in 2020?
2020 was obviously a very weird year. We had COVID, we had all the economic fallout associated with COVID. But in light of that, we actually had a very good 2020. The middle market was very strong. We actually hit a record year from a middle market perspective. Large corp was slower, as you can imagine. A lot of the ABL focus in our group is retail, and retail certainly had some challenges this year. But we've actually seen a pretty strong recovery in the fourth quarter. So I think when you look back and you say, how was 2020? Started pretty strong actually. Really hit hard when COVID hit and then came back out in the fourth quarter, started to come back out in the fourth quarter.
Yeah, I'd echo what Greg said. And, I think it combined, we had 57 names, new names to the ABL group. So it was a strong year for us.
Okay, great. Thank you. And when I think about the fact that you're working in different sectors, for example, and we talked about that just a moment ago, what sectors beyond retail and hospitality, because we all know that those have taken significant hits and challenges over the past year, what sectors would you say have been most significantly impacted by the economic downturn that happened in 2020?
Well, as you said, other than retail and hospitality, I think oil and gas really did, and those that service that business. We did see a downturn in demand. We've been working with our borrowers through that period of, through their needs. But, with oil prices coming back up, we expect that will, again, recover well. And we also saw a lot of pickups. On the other hand, borrowers had increased demands, those that did provide any type of PPE, hand sanitizers, that type of stuff. So it was a really unique marketplace.
And from our side of the business, we talked already briefly about retail. I mean, the other areas besides oil and gas was impacted severely from our portfolio side. We also saw it in the aerospace segment. We have a number of customers that are in parts manufacture, parts distribution. As you can imagine, with the slowdown in travel, that was a pretty pronounced hit. Overall, though, I would say even all the customers that were impacted, it was actually remarkable last year, their ability to really manage through those headwinds. The management teams did great jobs, and we ended up with really no significant non-accrual write-offs in the book.
Okay, so and that dovetails nicely into the next question, really, and that's looking at it from the borrower's perspective and how you've experienced what's been going on with them. What's been the most significant change in the borrower's expectation in this changing environment when they're dealing with a lender such as you? Has there been significant changes in what they're looking for?
COVID was a very challenging year, and the borrowers are forced to be in a position where they really need answers quickly. They need understanding, they need support. So while that's always a dynamic in any lender relationship, I think it was much more pronounced this year with COVID. We're in an environment where getting in audits, getting in appraisals are challenging. Our normal reporting regimen sometimes can be challenged because of demands that are put on the customer side. So a lot of it is really focused on the flexibility and understanding of what they're working through as a result of COVID. I would also say it's speed of decisions. While speed's always been critical, in a world where things are moving as fast as they are, it's even more critical than ever. A good example is the PPP program. We have a lot of customers that have benefited by the PPP program, and things had to move very quickly. And to me, that's what I've seen is really the biggest changes in the demands.
Yeah, the PPP did add a lot of additional stress in the overall system because nobody understood it in March and April when we're first rolling it out. During those periods of time, nobody knew what was going on. And so really, we had to spend time listening to the borrower and trying to understand the situation. And they had to explain, we really don't know where the sales are. So it was really being patient with the borrower and working with them is what I think, what the expectations were this year.
Yeah, and I think what Bill hit on is a good point too, that it's working with them, right? We've had customers that have needed structural over advances. We had to move into more FILO structures to kind of accommodate shifts in the underlying value of the assets, and cooperation was critical.
Now, the non-bank financials have been taking a significant portion of the ABL market. Today, what does it take for an ABL such as a bank? I'm sorry, today, what does it take a bank ABL such as Fifth Third to compete in these markets when you have the non-bank lenders able to get pretty aggressive?
I think for us, it's how we've always gone to the marketplace. We listen to what the borrower's needs are. We, understand what they're trying to accomplish, and then we structure a solution for them. Our team has been working together for a long time, and, we're known that what we propose, we close on. And so we take some of the uncertainty out of the marketplace. Plus, we've been in the marketplace for a long time, and it's not a finance company that may be in and out, and you just don't know.
I would say that from the middle market, large corp side of the house, it's a bit different because I think when you're looking at FinCo competition, it kind of is a spectrum more aggressive as you get to the lower end of the market. There's some big FinCos out there, no question, but what we can offer as a bank is we can offer a much more broad product suite. A lot of our transactions involve investment banking activities, capital markets executions, which might incorporate secured bonds, unsecured bonds, a lot of things that really aren't available via a FinCo delivery. I think also that when you look at our geographic footprint, our customers really value our positioning in terms of being local to their markets. FinCos are more inclined to be competing from kind of major metropolitan centers. So when you start getting into the rest of the country, having a local presence means a lot to these guys. And then I guess lastly, the bank can provide a lot of services on top of just the investment banking, capital markets. We're talking about treasury management, hedging, all the other stuff that kind of comes along with a bank that they just can't give through a FinCo.
Bill, is there anything that you wanted to add to that for any reason?
No, I think Greg covered it quite well. I mean, we do have the full suite of products, and it's the relationships that I think a bank brings a lot of the times, because we do value long-term relationships.
Fair enough. So my final question is about an outlook. We talked about that the fourth quarter bounced back pretty well for everybody, and you had a good productive time. And it sounds to me like you're pretty optimistic about 2021, but I don't want to put words in your mouth, gentlemen. So how would you wrap it up by saying what you think is going to happen in 2021 in terms of the markets in which you are playing?
For the middle market, large corp space, I would say we're definitely seeing a strengthening. We've seen an improvement in the fourth quarter. We've seen a definite improvement in the first quarter. So I'm very optimistic about 2021. I think there was a lot of noise that was in the market last year. There was COVID, there was the election, there was just a mass of unknowns and uncertainties. And while those uncertainties are still there to a degree, there's a lot of clarity that's been that's occurred over the last several months. I think we're closer to we're at a virus, the election's over. And just the general sense I get from talking to prospects and talking to our customers is they're pretty upbeat. We certainly have to get through COVID, and there's still some dangers that things could surge, but we're keeping our fingers crossed, and the backlog, is good.
Yeah, I actually thought the first quarter was going to be kicked off with a really great start, but with the third round, some say it's the second round of PPP coming out. I think it's going to tamper the lower ABL market because there's going to be that liquidity coming into it, and so no need to really change banks at that point in time. But as the economy comes back, our business is financing their working capital cycles, and there's going to be a huge demand for it. So I think we're going to be in an environment where, some of the banks will be a little bit stressed on their portfolio, and those are the type of deals that we're looking at that can show a clear turnaround, and they're going to be growing. So I think it's going to be a very good year. Probably the second to third quarter, we're going to see a lot of business as the economy opens up.
Okay, well, thank you very much for those answers. That wraps up my questions I had for you today. And I do appreciate both of your time today. And I hope that turns out to be a good year as you anticipate, and that everyone in your shops and your family stay safe and well. And I look forward to talking to you again in the future.